Now, a short while ago, the South African Reserve Bank's Monetary Policy Committee settled on a rate cut of 25 basis points for the first time since March 2018. They met the expectations of a strained economy of South Africans. Now, joining me for more to unpack this is Annabel Bishop, Chief Economist at Investec, and Isaah Mhlanga, Executive Chief Economist at Alexander Forbes Investments. Just to start off with you, Annabel, were you surprised today?
No, I don't think anyone was surprised. I think it was fully factored in by everyone.
Yeah, so absolutely nothing at all. But and the question I have for you at the top, Isaah, is do you think it could be the last one for a while, or how long do you think?
Possibly not. I think there's still some room for one more, perhaps. You still have growth issues, and a 25 basis point cut is not going to improve growth. Just to improve economic growth by 0.25 percentage points, you need at least 100 basis points in cut in interest rate. So 25 basis point is really not going to do much. Perhaps as a confidence booster, that's going to assist, but it's not going to lead to commercial banks extending credit again, because they do so on the basis of a strong growth in jobs, but also strong growth in incomes, which is something that we don't see in the economy. So we are not expecting any improvement from a consumer side that is going to boost economic growth. So we expect more cuts to come.
Because that's the question we were asking this morning before the cut, was that what is going to be the key to growth that seems so elusive in this country?
Look, I certainly think that confidence has been a real problem. You know, the fact that business confidence has been depressed over the past, or in the current decade, and of course the fact that we obviously had very low economic activities led to depressed confidence. So really it needs to be something which gives hope or expectation of faster economic growth going forwards. And of course, you know, we've seen a lot of attempts at repair and reform in government, but when it actually starts to really, you know, matter, when people can really see it and believe that the wheels are going to start turning and things are actually going to start looking a lot better, that's when I think we're going to see some faster progress. In other words, Lesetja Kganyago talks about structural changes as opposed to just little interest rate moves.
Yeah, well, but again, another factor which he mentioned this morning after he made his decision was the fact that it's going to be global issues, particularly this US-China trade war, which seems never ending, that are likely to affect the future progress of the economy here.
Yeah, I think this time it's a little bit different if we're talking about the broader economy. In previous recoveries, the global growth has tended to push South Africa or kickstart South Africa's economic growth. You can think about in 1998 after the Russian-Asian crisis, 2001 after the dot-com bubble, also 2008 after the financial crisis. A pickup in global growth was the catalyst to South Africa's economy improving. This time around, we're talking about a slowdown in global growth, which means growth has to be internally generated. And for that to happen, as Annabel said, we need confidence, which is also dependent on the implementation of policies. But we also have another, challenge with it, which is within the political space, where debates about whether this policy or that policy, you still have discussions of expropriation without compensation, nationalization of Reserve Bank, even though that has quietened down a bit, but we still also have issues hanging around, such as prescribed assets, which do not necessarily boost confidence. So until those things have washed out, we are unlikely to see improvement in economic growth. But even if we were to implement everything today, it's still going to take another 18 months before we can see strong growth coming. So it's still a difficult period ahead.
In terms of, just a bit wider here, in terms of policy from the government, what encouraging signs are you seeing that maybe, as you say, 18 months, 2 years' time, we might see these elusive green shoots of growth?
I think for now, some announcement that we had of reducing or at least simplifying the visa regimes that we have had from the Department of Home Affairs, which put some list of 7 countries which are no longer required to apply for visas. They will get visas on arrival. That is quite positive, particularly for the tourism industry. But the central factor that we have had from President Ramaphosa is the private sector is at the center of kickstarting South Africa's economic growth. There are quite a number of policy levers that are being put in place. Obviously, this takes some time. Once we have seen the cabinet, it's going to take some time to put them into place to start actually rolling out the implementation. But we have seen some positive signs.
So Annabel, talking about inflation, I've just got the highlights of his speech here in front of me. He said he cautioned that Sarb's 5-year inflation expectations had declined. He said they're in the midpoint of that 3 to 6% band. How do you look at this?
Well, I think, that's probably the underpin for the interest rate cut. Essentially having targeted inflation since 2001 and really seeing inflation running at the upper end of the target, this really represents a change in the Reserve Bank's view and indeed shows, quite a dampened inflation outlook going forwards. Sure, much of it is reflective of the very weak and suppressed economy that we were experiencing, but also, some of it will be as a consequence of the steady inflation targeting that we've seen over the years. And of course, looking forwards now, if inflation continues to remain at 4.5%, the Reserve Bank's got to decide at what level do they want the real interest rate. They said around 2% above inflation, 6.5% where it is now. That doesn't really give much chance for further interest rate cuts.
Yes, I mean, even in the Power Lunch today, we were talking to Transaction Capital, a new report out, and they reckon something like 10 million South Africans are in severely distressed debt. That means they've got no hope of paying it back. I mean, after all these years of all this tight monetary policy, you've still got people who are, drowning in this economy. When do you think it's ever going to turn around, do you think?
Well, I think, a lot of that's a function of economic consequence, people losing their jobs, perhaps, accessing even more debt to try and survive, and not obviously obtaining a job going forwards results in, many individuals drowning in debt. Sure, they've talked about the debt amnesty coming through, assisting people who've had these economic consequences, but that's for fairly low levels of debt. I think, the big kicker for us is really going to be when the economy starts to grow and sustainably fast. Towards that 5% mark, we saw unemployment drop down to 21% in the previous decade, and that was from close to 30%. For us to see that type of downward trajectory again would, I think, assist many who obviously have got themselves into an over-indebted situation.
And one of the worries too, isn't it, when the economy does start growing, we'll start running short of electricity. Is it not one of the problems why there are not so many power cuts recently? They say that there's not enough demand because the industry is on its way down.
I think that's one of the big issues that we know. The whole country knows Eskom's ability to provide stable electricity is one of the biggest risks to the economy, but not just to the economy in terms of supplying energy to industry, but also to the fiscals, because the bailouts that are continuously required to keep it afloat means there's a strain on the fiscals. With lower growth, it even accentuates the problem that we have, such that the credit rating downgrades from Moody's are still very much a real issue that we may have to contend with come October medium-term budget policy statement. So it's quite important that the Eskom issue is dealt with. Yes, we've had some announcements in terms of 230 billion that is going to be given to Eskom through a special appropriation bill, but we still don't have the details of how the financial sustainability is going to be achieved. And that is an important detail that we would need to get to boost confidence for industry.
I know it's the $1 million question that most economists are asked these days, but I mean, where is this jobs and growth going to come from, do you think? And how can this economy actually adopt the right strategy to bring it back?
I think the solutions we know. There have a lot of diagnostic reports that were done by government over the past decades that says for us to grow, we need to boost confidence. I remember Minister Malusi Gigawa, then Finance Minister, he said some 7 confidence boosting measures, which means they have diagnosed what is required to boost confidence, but we just haven't done the right things. So I can't offer you new solutions because all the solutions were diagnosed by government.
So, Annabel, I mean, if I could just ask the question to you, I mean, where do you think it's going to come from? I mean, I know it's a big question this day and age.
I think I agree with Isaac. It's very much implementing. The fact of the matter is we know what needs to be done. Just we continue to see a lag in terms of implementation. To me, the State of the Nation address that we've had recently in June was very much the one that we should have had at the start of last year. You feel there's like a year and a half has passed, and we're still sitting at this really suffocated level in the economy. We're not implementing the changes that need to be made. Some of them, for example, are regulatory changes. The manufacturing industry declining, deindustrialization in South Africa, losing our foundry industry as it disappears. We can't continue to sit and wait for over a year for some individuals to try and get environmental impact assessment clearances. For example, when they buy a big smelter machinery, they want to put it online, they're paying the bank, and now they've got to sit and wait for the government government departments to do their job. These are key issues that we're facing in the economy. We need to improve the ease of doing business, and that has deteriorated in the current decade.
And obviously, behind all of this is investment. I mean, one of the analysts we talked to this morning on Power Lunch was saying that getting more interest from overseas at the moment in what's happening here than they are domestically. And they were saying there must be a way in which corporate, homegrown South African business will start putting out that cash chest and investing in the economy here. How likely is that?
I think perhaps you're quite mistaken there, Chris. If you look at the massive increase in government debt in this decade that we have, you need to understand what it's been funded by. And it has actually been funded by the corporates. The household saving is close to zero. Foreign investors only invest about 37% in our bonds. The rest has come from the only savings pool we have, and that's the corporates who put their money into banks. Banks churn it over in normal operating activities, but essentially with all the banking regulations with Basel that's come through, the banks have been required to increase their liquidity to hold a lot of government paper, treasury bills from government, and that's helped this massive blowout in terms of government debt. You say to the corporates now, you need to start investing. They'll need to draw their money out of the banking system. Banks would need to access money to pay them, cash funds, because they've obviously on-lent it. They need to go to government to tap it in. So it's a misnomer to think that, corporates are not actually investing. And the other point as well is that corporate savings are pretty much the same level they were in 1994 if you exclude inflation from it and depreciation costs. So, it's more about, what actually needs to be done to improve the environment. And many corporates obviously battling against high debt levels as well, and many actually falling over. Look what's happening in Hewlett, for example. So it's not a clear-cut situation, and I think blaming the corporates would be the wrong thing to do here. Instead, you need to understand that someone would have had to pay for that huge escalation in government debt, which is actually risking us seeing a credit rating downgrade now. That money didn't just naturally appear in the economy.
Well, thank you very much indeed for your time and insights. Annabel Bishop, Chief Economist at Investec, and Isaah Mhlanga, Executive Chief Economist at Alexander Forbes Investment.